Hi, this is Nick Ryder with Smart Currency Exchange, the international payment specialist. Here's your look ahead to the week on the currency markets to ensure that you are protected against any adverse market movements. Now, sterling finished quite strongly against the US dollar last week, so much so that it's broken the 165 barrier this morning. That's really more due to weak US data last week, but there is still quite a bit of volatility given the long weekend and the lack of data. It really caused sterling to jump slightly against the US dollar. So there is quite a bit of data out this week in the UK. We've got manufacturing, services and construction figures all out, which will give a picture of the economy in April and May. And so essentially any significant movements on that front will paint a picture of the UK recovery. So it's going to be very closely watched, and to be honest, with the poor data we have seen over the last few months, I wouldn't be surprised if it does come in slightly worse than expected, which will see sterling, you would expect sterling to drop off as a result. Now, in the Eurozone, over the weekend we had some quite big news in that EU finance ministers met, and Mr. Jean-Claude Juncker, head of the Europe group of finance ministers, actually ruled out a total restructuring of Greek debt, which really helped boost the euro. Been a lot of concerns over the last few weeks that even potentially that Greece would even leave the euro as a whole. So the fact that they've ruled out restructuring completely has really helped boost the euro, especially against the US dollar. Now we're actually on track for a sort of 145 level. We've got inflation data out a bit later on, which could see a bit of a boost again, depending on what's happening, obviously, with an expectation of further interest rate rises in the region. And the USA, the US dollar slipped against a basket of currencies to the lowest level in 3 weeks. That's really off the back of poor data towards the end of last week and a general feeling that recovery is very stagnant. Now we've got manufacturing and further employment figures out later in the week. Again, there's an expectation that those are going to be slightly worse than expected and show the USA as a very stagnant recovery. Just to recap on the data then, we've got UK manufacturing, services and construction, PMI, which is a survey of the purchasing managers to give you a very good idea of the activity in those sectors. And we've got European inflation data, and then the US manufacturing and employment figures as well. So really the best thing to do to avoid losing out essentially is to get in touch with one of the foreign exchange traders here and have a chat with them about how to protect yourself going forward against any adverse market movements. Thanks very much.